Welcome to JRFX. Let's go through the key economic announcements that traders need to be watching out every month. If you watch the market, there's a whole list of data get announced that can affect the market. Like GDP, Gross Domestic Product, PMI, the Purchasing Managers Index, non-farm payrolls as unemployment data. You may ask why economic calendar is important and how we use it. Let's dive into it. We'll show you what's the most important and how to pick them up on the economic calendar. The first one is interest rates. Every month the central banks will have an interest rate announcement. Well, we have low interest rates for many years. This is for all markets, particularly for Forex. If we see interest rates rise in one area, traditionally it would be good for that country. This is also for stock market. If we see interest rates rise, cash becomes more attractive. Another one is inflation data, like CPI, Consumer Price Index. It's a cost of living. As inflation starts to rise, this will have a knock-on impact when it comes to the central bank interest rate policy. It's a classic way and stop runaway inflation is to adjust interest rates. So these two are tied together. Sometimes we can see all sorts of volatility across different assets, gold, currencies and stocks. We get regular updates about the state of employment in major economic zones. The big one is non-farm payrolls. U.S. non-farm payroll is released the first Friday of every month. It's how many jobs we added or lost in the economy previous month. We observed quite a lot of volatility short-term after the announcement. It's not about the absolute number. It's all about how does it differ from what the market was expecting. If the market was expecting 150,000 jobs to be added but it was only 80,000. You can see dramatic reaction of the market. GDP is another important one. Again, it's announced by major world economies. It's all about what the market is expecting. The important one here is the percentage one. Quarter-on-quarter growth, or annual growth. If the market is expecting 3% growth but it's actually 2%. It's a big miss. It's about how does it tie in with what the market has been expecting from this number. These are the ones that really can inject volatility into the market. It's very easy to track these if we have an economic calendar. When you go to JRFX calendar, you can see the date, event, previous, consensus and actual data. On the right-hand corner, there's a drop-down for you to adjust the time zone that suits you best. If you click on previous or next, you can check out more events. If you want to focus on particular currencies or events, there's a drop-down list for you to select from. If you have any comments or feedback, you are very welcome to leave your messages. If you don't want to miss out, you can subscribe to our channel.